Have you heard the rumors about Alibaba? There's been a talk of a possible breakup for a while now. It seems that Chinese regulators have been concerned about the company's market power for some time. Alibaba is a major player in the online economy, with interests that span everything from e-commerce and digital payments to cloud computing and entertainment. The Chinese Communist Party doesn't like anything, especially a big private business that outshines them. They are also not too happy about Jack Ma, Alibaba's founder, who has become a bit of an icon in the Chinese business world because he's not afraid to question the government's decisions. All of these concerns led to a 2-year crackdown on Alibaba, which at its worst saw the company's market value drop by 80%, or nearly $700 billion. Some market watchers think that this was all leading up to a forced breakup of the company. On March 28th, Alibaba, one of the largest e-commerce companies in the world, announced that it's splitting into 6 independent business units. There's another reason behind the split. It's all about decentralizing decision-making and moving away from Alibaba's founder, who hasn't been involved in day-to-day management since 2015, but still plays a role in strategic decisions. So what exactly will these new business units look like? Well, e-commerce will still be the company's biggest unit, with Taobao, Tmall and other online marketplaces making up almost 70% of their revenues. But there's also going to be a separate unit for their artificial intelligence and cloud computing operations, which will be led by the current Group Chief Executive Daniel Zhang. Alibaba's restructuring also includes an international unit that will take care of the company's foreign ventures. This includes Lazada, an e-commerce firm based in Singapore, and Trendyol in Turkey. Changyao, a huge logistics company, will have its own division, while a local services group will oversee Ele.me, a Chinese food delivery app. And there's a media assets group, which is the smallest of Alibaba's 6 daughter firms, accounting for just 3% of their revenues. Each of these units may eventually be able to raise capital on its own through initial public offerings. It seems like investors are feeling positive about Alibaba's restructuring. The company's share price went up by a whopping 14% in New York, where it's listed in addition to Hong Kong. As for Jack Ma, the founder of Alibaba, he seems to be ready to move forward as well. He was recently spotted in Hangzhou, which is Alibaba's hometown. All of this suggests that Alibaba is in a good position to weather the storm of regulatory changes in China's tech industry. Of course, only time will tell how this all plays out. But for now, it seems like Alibaba and other Chinese tech giants are feeling optimistic about the future.